hi everyone. Hey, thank you for joining me today on the Central Coast Market Podcast. Be sure you like and subscribe so that you never miss an episode. And I'm here again with our local expert lender, Zoe Raithel. She's going to be talking to us. She's also a reverse mortgage expert. And there's so much bad press, so much press out there about how reverse mortgages work. I personally, when I first started my career, there was so much negative about it, and stay away from it. Seniors get ripped off. In fact, the only real positive thing I ever heard was like on the commercials, Tom Selleck or some celebrity saying, this is what you need to do.
I wish he would show up at my door.
But Zoe is so well versed in this, so she's going to explain and go through reverse mortgages and how they help some seniors.
Yes.
So if you could, just in a nutshell, explain what a reverse mortgage is.
Yeah, awesome. Thank you so much. And you're exactly right. There's a lot of misinformation out in the world today about reverse mortgages. And so I'm super excited to be here and just share more good stuff.
Thank you for your time.
Of course. So what a reverse mortgage is think about it this way, very similar to a forward mortgage, which is a traditional mortgage.
Okay.
We have a lien on our home. We got a loan to buy the home or refinance the home. So they're both the same that way. They're both loans. Okay. But on your regular forward loan, a regular loan, you make a payment every month and the balance goes down. Right?
Right.
On a reverse mortgage, you have a loan. You have no payment due or necessary for the whole time you live in the home for the rest of your life. But of course, there is interest on that loan that I gave you.
Right.
So you're not making any payments. So the balance is going to go up in reverse.
Okay.
So that's the difference. We're not making a payment, so the balance goes up versus your traditional loan where the balance would go down. So a reverse mortgage allows seniors to stay in their homes with no monthly payments. The only things you have to be responsible for are your taxes and insurance. You can live in your home for the rest of your life without a payment.
That is really interesting. So I would assume then that is there a certain age that you would qualify for this? I'm sure it's a person by person entity, like getting a mortgage.
It is.
And circumstances. But is there a certain age where it benefits you more than others, or you have to be a certain age to qualify?
Yeah, qualifying a traditional government-backed reverse mortgage, we call them in the world of reverse HECMs, Home Equity Conversion Mortgage.
Okay.
That's backed by FHA, Federal Housing Administration. Those you need to be 62 years old or older. And then there are proprietary products that have the same benefits, but just a different type of loan program, but a reverse mortgage. And those can go down to 55 years old.
Really?
Yeah. You're a senior, so am I.
Well, I didn't want to admit that, but so the benefits of that, like 55, are you, when you calculate for a reverse mortgage, what is that benefit to you? Is it, because sometimes I've heard, in the past, seniors that are in trouble, seniors that are having financial difficulty, they're not making it, and they're doing this on their homes.
Yeah.
Is it necessarily something like that, or it's something you can do to benefit yourself? Mm-hmm. Without all of that problem? I know that you can, that's another question for buying a home with a reverse mortgage. We're going to skip that for a minute. But the advantages of that.
Yeah. So, a reverse mortgage can work very nicely for someone who is tight on their funds in their senior years. Let's think about, we have a huge amount of equity in our homes today. That was part of your savings account.
Uh-huh.
You either put a lot of money down in the beginning and you invested in real estate and you made a lot of payments on it and you've either paid it off or you have a very little loan left. You have a lot of equity. So that is your savings account, one of them. So someone who comes across times where they need extra funds because everything costs more today.
Right.
Inflation. They have medical issues. They may have a need to renovate their home to make it more user-friendly for their senior years. Accommodations. Maybe they just want to add to their home. They need funds to do that so they can have a caretaker in the home. There's a variety of needs-based reasons that a reverse mortgage is fantastic because you can accomplish your needs and your goals without having to take out that extra monthly money and have a commitment to a payment. So that makes it easier to qualify, as well as provide a more comfortable lifestyle for you in retirement. So that's needs-based. But over time, and most recently, a lot of financial advisors are looking at reverse mortgages as one pillar of a financial plan that might be of assistance to someone who you might not think traditionally would be a reverse mortgage candidate. Everyone thinks it's, oh my gosh, it's the senior that's about to have to not, get their meds because they can't afford them.
That's where it's gone.
Yeah, well, now that might be a good solution, a reverse mortgage for that person, but I want to tell you that's not the only reason for a reverse mortgage. I'm working with a gal right now. She's 85 years old. She's awesome. She's a spitfire, and she wants to live her golden years being able to travel. She's got a huge equity position in her home. Her family is all supportive of her being able to do what she wants to do, which is go to New Orleans, go to Saints games, go. I mean, that girl wants to go. And so why not be able to do that while she still can? Could she wait till she was 90 to get a reverse mortgage? She could, but her point was, I'm really healthy and getting around really well right now. I want to do this while I have time to do that. So it can be as simple as I need funds to fund my medical, to as expansive as I want to tap some of my savings, my equity now, because I want to live the life I want to live right now while I can.
Gotcha.
Yeah.
And Zoe, do you have to have own your house free and clear to qualify for the reverse mortgage? Could you have a little loan on it? Or does any of that come into play to qualify?
Yeah. So you do not have to own your home free and clear. We would pay off the first mortgage you have.
Okay.
And you would have one lien on the property, the reverse mortgage. But again, that's another benefit. If we pay off the lien you have, that had a monthly payment on it. So now that payment is gone, and now you may have access to more funds through the reverse mortgage. Now, I want to tell you one of the reasons that there's kind of a negative stigma against reverse mortgages has been in the past that people feel like somehow I'll be upside down in the house. Okay, you just told me, Zoe, the balance is going to go up over time. But guess what else goes up over time? Values. So typically they go lockstep together. But one thing there's been many things that have occurred with reverse mortgages over time, that there were some issues in the past. I'm going to talk about some of them. Like one of them is giving too much on a reverse mortgage against that value. That happened in the past. So now let me give you, everything is specific to the borrower, like you said.
Right.
It's based on your age, based on the value of the property. But I'll give you an example. Somebody in their mid-60s to 70 years old, we on a reverse mortgage would give about 40% of the value.
Okay.
So this is what I'm telling you. The value's up here just to begin with. Your loan starts here. We have carved out a huge amount of equity to save for yourself. You don't make payments, you don't make payments, you don't make payments. But even at the time of your passing, or you end up selling the house because you go into assisted living or you move out of the area, whatever, you still are typically going to have some level of equity in the home. But here's another thing that changed. So that's one thing that changed. We don't give as much anymore.
Okay.
We leave a lot of equity carved out. The other thing that's changed is reverse mortgages are now what's called non-recourse loans. And a non-recourse loan means in that crazy world that you live till you're 100 years old and the balance kept going up. And in all that time, somehow, some way, when you leave the home, your value's down here. It's almost an impossible feat, especially on the Central Coast. But let's just talk about it. What if it did? You nor your heirs would never owe more than the house is worth.
Okay. If you were to pass or go to sell it,
yes,
your heirs would not have to make up that difference?
If it was that crazy day that the balance they owe is more than the value,
got you. Okay.
You would never be leaving your heirs with a debt. That's called a non-recourse feature, and so that's a very nice addition to all the safety features that have been added over time.
That's really important. And when you talk about safety features, that, like you said, some of those didn't exist, so it was a very scary thing. I could see where you could get into trouble on that, but having that safety net, so to speak, is really great. And when you say Is there an option to make a payment on that?
Of course.
You say it's reversed and you never have to make a payment.
It's not expected, no.
It's not expected, but you could if you wanted to.
Yes.
And in the end, you could sell the home. Your heirs would not have to, like you said, pay if there was more than what you owed.
Yes. Yes is the answer to the question. But I want to tell you that when we put together our proposals, even with a very conservative appreciation estimate of 4% a year, sometimes it's 10,
right.
Sometimes it's 1. Mostly on the coast it goes up, but conservatively at 4% a year, really your balance, your heirs still have a significant inheritance. If that's an important feature to you, I can show you what that number would look like if you die at 99. I will tell you you're still leaving something to your kids if that's an important thing. But in some wonky world that somehow the balance was this high and the value did drop, they would never owe any money. The difference. The other piece that keeps it safe today that has been added, so I've been involved in reverse mortgages in one way or shape or form for almost 20 years. And so this is something that did change, I'm going to say in the last 5 to 10 years, and that is that a reverse mortgage specialist, as myself, we need to do a financial assessment. So a lot of times you think, well, if there's no monthly payment, what do you have to underwrite?
Yeah, that was kind of my question.
I must be approved. There's no payment.
Right.
So now, reverse mortgage specialists, we do have to conduct a financial assessment because, as I mentioned, while I'm not going to ask you for a monthly payment, you have to be responsible for your property taxes. You have to be responsible for your homeowner's insurance. If there's an HOA, homeowners association, you have to be responsible for that.
Okay.
Also, we know you need to turn on the lights.
Right.
And, pay your gas bill, keep the heat going. So there is a subset of numbers that are your responsibility, and I do have to take in your income documentation, whether that's a fixed Social Security or a pension, or maybe you're still working, whatever. I do have to do an actual financial assessment. And so that helps the senior as well make sure we're setting them up for success. Right. That did happen in the past where that was not a feature of underwriting. And so a senior may not pay their property taxes. And then that is when you might go into a foreclosure situation because property taxes are a government, the government comes, you have to pay.
Yeah.
So that is no longer an issue, just in the sense that we're making sure we're setting seniors up for success by making sure they do have enough money incoming to cover all of these things.
And to cover the income coming in to cover the utilities and all of those things you just mentioned, but not necessarily the payment.
That's correct, because there isn't one.
Right.
But we know that we're setting you up for success, that your income today will cover property taxes,
okay,
homeowner's insurance, HOA dues, turning on the lights, your electric bill, and any other debts you have. If you had a car, auto payment, we count all of that now. That's something that didn't really occur in this way until, like I said, within the last 5 to 10 years, there's a full financial assessment now.
Gotcha. Good. So that's your qualification.
Yes,
for
correct.
the borrower.
Exactly right.
Okay. And the 40%. I want to go back to that for a minute because 40%, that is the top in value of the home that you would lend or do the reverse mortgage amount of money. 40% on any given home for any buyer. That's just your top.
It's not the top. It's based on age. So
okay.
If someone was 90 years old, they might get a little more.
Got you.
If somebody is 62 years old, they might get a little less.
Okay, that makes sense.
So it's maybe 35% for someone in their 60s of the value. So what that means is if your property is valued at $1 million, we might have $350,000 to $400,000 available. So if that's free and clear, then that means that is available to you. A reverse mortgage is a great tool in that it has a variety of options that would meet your needs. So you could say, all right, I've got $400,000 available to me. You told me that, Zoe. And I'll say, how would you like to see that? Would it be helpful to you to have a monthly stream of deposits into your bank account? Help you monthly. You can set up either term, which is, I would like $2,000 for the next 10 years to show up in my bank account every month. So you can you pay yourself.
Right.
Okay, you can do a 10-year, TENURE, and you can say, I'd like to receive X amount of dollars, $1,200. We work together on what the number is, what's available, for the rest of my life. You don't have to pick a term. You can pick 10-year is the rest of your life. You could say, I'd want some money all up front. I'd like some cash up front because I have specific needs. I need to put a roof on. I've got this bill coming. I need this much money up front. You can take some money cash up front. And then most of my clients use a combination of all of the things I just mentioned with a line of credit. Now, what is great about a reverse mortgage line of credit, well, multiple things, but you can just either take a little bit at the beginning just to pay little things, the cash, and then just leave it all in there for when you might need it for someone to come into your home and help you. Long-term care, variety of different things. You just leave it and use it as you need it. Now, here's something that's different about a line of credit with a reverse mortgage. That's different than a home equity line of credit, a traditional one.
Okay.
A line of credit with a reverse mortgage, again, you're not making any payments. That's a little different. But the other part is your line of credit with a reverse mortgage actually grows with time, the available credit availability, as well as it's guaranteed. So a home equity line of credit, maybe if you've ever had one in the past, and definitely in our lifetime in the last 10 or 20 years, the banks or credit unions have, you'll get a notice, it's been frozen. You can't use it anymore.
Right.
You're maxed out, all of these types of things. And then if it's frozen, then you can't get it anymore.
Right.
That's not the case with a reverse mortgage. It's available to you.
That wouldn't happen?
That would not happen.
Okay.
Correct.
Okay.
It's available to you throughout, whatever the line of credit is, and it grows, but it would be available to you and it would never be frozen.
That sounds so great. I mean, so essentially you have to bring folks in, talk to you about their specific situation, value of the house,
their age.
Their age, okay, all these things that come into play. And this probably sounds obvious, but you would be doing an appraisal on their home to get that market value.
Yes.
Yeah, okay.
During the transaction.
Okay,
Yes.
good. All of those come into play for however the reverse mortgage can work for you personally.
Yes, correct. Absolutely.
Right? And this is good to know. 62, that's really interesting. When you talk about qualifying and having folks in on what would work best for them, are there closing costs, and what are those based on, like upfront costs for the loan? Similar to, your 30-year fixed or what have you, right?
Yeah, absolutely. Well, yes and no.
Okay. That's why we have her.
Good question. So I've been giving you a wealth of great news about reverse mortgages and hopefully dispelling some of the myths and giving you some great ideas about how they're more secure and safe and a good solution for many seniors. The one myth I cannot dispel because it's not a myth, is that they're expensive.
They are?
Yeah.
Okay. Can you give us an example?
Of course. Yeah. So it really is... let me see the best way to explain it. If you think about this, I'm going to give you the real number in a minute, but I want to preface it here.
Okay, good.
I'm getting there.
Hold on, everyone.
So you're utilizing a reverse mortgage for, first of all, safety and security of having funds available to you in your senior years. Mm-hmm. You're also getting a reverse mortgage that has a non-recourse feature, which is an insurance policy that you'll never owe more than the house is worth. And you've also set yourself up for success that you can live in the house for the rest of your life with no monthly payments. Okay, mainly the non-recourse feature, but all of these things go into the fact that why there's a fee that is charged at closing. It's not technically out of pocket usually, like you're not writing a check for it, but it's a fee. It'll come out of your total proceeds.
Okay, so like at close of escrow.
Yes, so instead of you receiving X amount of dollars on your value of your home, just like a regular refinance, there's going to be some closing costs and it gets taken away from that.
Right.
So I'm not going to say it's not a fee because it is. But you're not writing a check for it today.
Okay.
It's coming out of the house. But I will give you an example. The typical insurance fee on a HECM, a government-backed reverse mortgage, is 2% of the appraised value.
Okay.
So if you have a house that's worth $1 million, the one fee line item alone, 2% is $20,000.
Gotcha.
Okay. There will also be a fee item that is traditional on many loans, but a reverse mortgage has it as well, an origination fee. That's usually $6,000 on a reverse mortgage. And then you have your traditional closing costs, which are escrow, title, appraisal. So depending on the value of your home, you could be looking at anywhere between $25,000 and $35,000.
Okay. Well,
It is one time upfront and it's done, but it stands out because that is obviously significantly more than a traditional refinance.
Sure. But I mean, you could argue too that, I mean, it's for security. It's a long-term thing that benefits you. So it probably, when you look at everything, is worth the cost of doing it. And it's good that you went over like escrow fees. It's a typical, you go through the escrow process, not as long. Of course. But those are all fees that people need to understand, because right, they get everybody, including me, gets the idea, oh, this is going to cost, a couple $1,000 or free, which nothing's free, right? So that was really good information. I didn't know that. So it's 2% of the appraised value.
Yes.
On top of the $6,000. What was that? Could you say that again?
It's called the $6,000 is origination cost. That's a standard fee on a reverse mortgage.
Okay.
And then traditional closing costs, which might be another $3,000, $4,000, $5,000, depending on the unique circumstances. So, I mean, when you think about it this way, someone wants to stay in their home for the rest of their life. This is their home. They want to live here, and and let's say it's already single level. I don't want to leave, but I need money for living. I need money to bring someone into my home. I want or I don't know. Maybe you'd like to gift while you're still alive your grandkids a college education. A down payment for closing costs for somebody a down payment for a home for your adult child. There's a lot of reasons people would want to get money, and not necessarily either they don't have it in a separate investment account or not necessarily tap their investment account. That's why I was saying financial advisors are starting to look at these as just one more rung, because is it the smartest thing to take money out of an investment account that's making you money for your needs today? Is it at least an option to explore that there's a lot of money trapped in your home?
Right.
Can we access that but still have you feel comfortable and not having to make a monthly payment with a traditional cash out refinance where now you're strapped to that payment? There's just a variety of ways to look at it.
And use your home, not unlike like you said, the HELOCs, the lines of credit, or use your home if you're going to stay there for the rest of your life. Use that value for yourself and your needs. I think it's a great product. And again, you do have to sit down with Zoe and go over, what your qualifications are, what it would make the most sense to you to do these loans. I had another real quick question. Right on truth number 7. Now, this is about the truth of reverse mortgages, right? And demystifying them. But you say less than 1% of CFPB, I don't know what that is, you'll explain it, CFPB complaints were for reverse mortgages. Explain that if you would.
So the Consumer Financial Protection Bureau was born out of really the mortgage crisis back in 2008, 2009. When all us bad lenders did terrible things and whatever. Right. There's certain things that's good about that, protections for all consumers related to finances. So I'm not going to say it's a bad entity, but that's what it is. It's there to help protect and make sure that the bad players are out of the business, and most are gone. These we have to now obviously be licensed to do what I do, take certifications to do what I do. So the CFPB monitors and manages to make sure that consumers are safe. When they get complaints from consumers, it's related to, hey, my closing costs, I have something here that the lender gave me that said they were going to be this, and now there's something else. There's complaints. Or it could be a veteran that had this problem, or it could be a payday lender, financial misdeeds, okay? So that CFPB, though, interestingly enough, you would, in your mind, because of all the news about reverse mortgages, you would think there would be complaints all the time. Right. Because, but as it's turned out, we've kind of self-managed our way, this industry of reverse mortgage specialists, into better decisioning and better clarity and security for the seniors. So now the CFPB reports less than 1% of all their complaints are about reverse mortgages. So they're very well done today.
That's a great stat. So Zoe, to really kind of wrap this up, what happens when the seniors, all the seniors, the husband and wife or whomever is there, pass away and there's nobody else on this reverse mortgage loan?
Yeah, good question. So a reverse mortgage, as I stated, lets you stay in your home for the rest of your life with no monthly payments. But at some point they will pass or leave the home for more than 12 months. So in other words, that would look like I've moved into assisted living and I'm not coming back to the home. So a reverse mortgage is then due and payable when all the seniors that were on the loan have now left the home as their primary residence, either through passing or have moved. Okay. So what happens though is now the heirs own the home, and they would be best to communicate with the reverse mortgage company from the mortgage statement.
So they would call and say, okay, this is what happened.
Yep, mom has passed, and they would be instructed how to pay off the loan, whatever the balance is at that time. Now, of course, most people after mom has passed, even after a short time, there's an estate. We don't know what we're going to do. My sister said this, my brother said that. So a reverse mortgage company does give you plenty of time to resolve mom's estate. So what the options would include, you now own the home, so you could sell it. You, just like a traditional sale, you would sell it for a certain dollar figure, the market sale. Then whatever the balance of the reverse mortgage is would be paid off, and the remainder would go to the heirs.
Gotcha.
No problem there. Sometimes heirs want to keep the home. It's a family home. They might want to move into it. They might want to keep it and rent it out, keep it as a rental. So as you are the heir and you own the home now, that would be a refinance of your own property. You still need to pay off the reverse mortgage, but it would just be paying that off, the balance, and then you would get your own loan in your own name, either as your primary residence, because you're living in it, or I have my own home over here, but I'm going to keep mom's home and I'm going to rent it out. And so then you can just refinance into your own name at that time.
Great.
So, couple of different options. Yeah.
Really good option. This has been so helpful, Zoe. I mean, really, it just gave me more information about how this works, that it's really not a scary thing. And that's what we have to have, is the right information and good information, and someone that knows what they're doing, because Zoe is a reverse mortgage specialist. So hopefully everyone found this information super interesting.
I have two more things real quick.
Please
Okay.
do. In fact, I should have asked you.
No, one is that, and I don't want to blow everybody's mind here, too much information, but one is, did you know you can use a reverse mortgage to purchase a home?
Oh, no, please do. Please do talk about that.
Yeah. So let's talk about that. And I will give you a specific example that's very helpful. So I had a client here on the Central Coast who had a property with acreage. They were nearing their 80s. He had some health issues, and they just knew that this property was not something they could keep up on. They were going to sell it and net about $650,000 after they paid off their, all their things. Well, once they started looking at what they wanted, and they wanted to live in traditions, a 55 and older, nicer community, helpful for her to have a community around her,
yes,
for her husband. Okay, but those were selling for over $800,000 at that time. They have $650,000, and okay, we could get a loan, but do we want to have a monthly payment? And also, we really probably should be setting aside some of that $650,000 we're going to net for the husband's healthcare needs.
Gotcha.
Okay. So now really we will only want to spend about $500 on the house and earmark $150 to savings to have someone help us in the house. So what are we really going to buy with $500?
Right.
Still not what they wanted. With a reverse for purchase, we were able to use the monies they wanted to earmark, $500, set aside the $150 in savings, and buy that $800,000 home they wanted with a reverse mortgage, with just the money they wanted to use and no monthly payment for the rest of their life. It's a great opportunity to...
mind-blowing.
Yeah.
That blew my mind. So a reverse for purchase.
Yes.
So on the home you're living in.
The purchase that you're going to buy. Yeah. You're in a contract to buy a home.
Uh-huh.
And instead of getting a regular traditional loan.
Okay.
I'm going to get a reverse mortgage loan. You can use them for a purchase.
That is so interesting.
Yeah.
Wow.
And one more thing.
Wow. No. Yeah. Please.
But
keep
wait,
going.
there's more. Ginsu knife. No. You can also, and I have one of these I'm working on right now for a client, utilize a reverse mortgage as a second mortgage. Okay, so sit with me for a minute.
Okay.
You've got a first mortgage. Many of us do. At 3% interest rate. Many of us do. Nobody wants to touch that as much as, we on a reverse mortgage, you already own the home and you've got this mortgage on it, I'm talking, what we've talked about today is I'm going to pay that one off.
Right.
So you'll have no payments. Well, there is an option that says, well, no, my first mortgage is okay. It's a great interest rate and it's a low payment. I just need some extra money and I don't want another payment, like a home equity line of credit. Okay? So I can get you a second mortgage that is a reverse mortgage. So you keep your first mortgage, you keep making payments on that, nothing changes. The reverse mortgage gets you the money you want. It's a lump sum, what you qualify for, and no monthly payments on that. So you can kind of balance out your equity position that way. And so I have somebody that's putting an ADU on their property, accessory dwelling unit, a granny unit for their family members. They needed about $300,000 to build that, and but $300,000 on a home equity line of credit would be, somewhere in the neighborhood of $2,500 to $3,000 a month.
That's right.
So how do we do this? We know we need family. We want to build it. We don't have the money to do that because we don't have the monthly reverse second mortgage.
So on a reverse second mortgage, are you still doing the 2% of the value? It's still going to cost you.
The closing costs are there and higher than a normal home equity line of credit, but not that 2% is not there. Although the same, what do you want to call it? Security still exists. There's still a non-recourse feature in those types of things, but it would not be the 2% of the value. That line item would not be there.
Okay, so it would be, essentially, you could say cheaper on that kind of a loan.
Yes,
depending.
that's true.
Depending.
That is true. Mm-hmm.
Wow, two great points. I'm glad you threw in there because those were both mind blowing. I didn't know they even existed.
Yeah. Lots of ways
else
to do it.
you want to share with us before I cut you off?
No. I would just be happy to chat with anybody about it. I want to let people know that to have a discussion with a reverse mortgage specialist such as myself doesn't cost anything. There's no, there's nothing up front. Usually with reverse mortgages, I conduct anywhere between 2 and 3 meetings because we have an initial chat and just give some basic information, to the extent that the client, what they need. And then they think, well, maybe my family might want to know about this or my kids.
Yes.
Let's get together with them. Let's make sure if they have questions, how that works. And then there's still a process where I put together a proposal in writing. We review it together. And then the final piece before we even begin is called counseling. So you will have a third party besides me. Most people have said, Zoe, you prepared me perfectly for counseling, but it is another safety feature for other lenders that you would have a third party. You get a list of housing counselors that you would get on the phone with and go through it again.
Right.
In another way.
Right.
Just to make sure that everyone's comfortable with what it is. It is a unique product, reverse mortgages. So you want to be sure you're working with someone that has good clarity, spends time with you, and works in your fashion so that if that means old school, sitting at a desk, writing your name, no problem. Obviously, technology is fine as well. But you really want to find someone, especially on a reverse mortgage, that's going to take the time with you and has the heart to do it, and that's what I like to do. So,
right, yeah. And all those safeguards make it a much better, safer product than it used to be.
That is absolutely true.
Right?
Yes.
So that's what we're looking for, so people don't get taken advantage of. And all this information, for any age, to me, we can all use this information. We have aging parents, our grandparents. So it's just good to get this information from a specialist like Zoe, and like she said, it doesn't cost you anything to consult with her. I encourage you to do that if this is something that sounds like it would work for you or your family members. So again, thank you, Zoe, for joining me today. I'm going to have her back a lot because she's got so much great information for us, but Thank you for your time.
Thank you, Cindy.
And thank you all for joining us. Really appreciate it. Zoe's information will be at the end of this podcast, and don't forget to like and subscribe so you don't miss anything this lady has to say. Okay? Thank you so much.
Thanks, guys.